Good afternoon and happy Friday. It is March 7th, and some of the markets are still open going into the close, but it has been a whirlwind back and forth in pretty much every asset class out there. I'm Oliver Slope, and with me today, my colleague Dan White, our head of research. Again, a valuable resource. If you've got any questions over anything, he is your guy. Talking about resources. We do put out a lot of great educational information, technical, actionable research every single morning. I cover the agricultural space. Dan covers the energy space. We've got other folks in the office covering precious metals, stock indices, etc. So if you've not signed up for a free trial of that, head over to bluelinefutures.com and get yourself signed up for a free trial of that research. Now that we got that plug out of the way, Dan, let's go ahead and get this started. It was a wild week. Did you have to bust out your inhaler this week?
I'm exhausted. I haven't shaved. I look like a wreck. It's been chaos. I think that's what we'll title this week's videos. Like,
yeah, absolutely. So, what were some of the bigger moving markets that caught your eye this week?
Commodity wise, outside of the tariff and trade craziness, nat gas had a big run up. Cold shock coming through, I believe, around mid month. This could be a very volatile time of the year for nat gas called shoulder season, right? Where we can get some very warm weather to close out the month, or if you're from Chicago, we can get a blizzard in March. So this time of year, the nat gas balance sheet can it's very volatile. So that drove nat gas. Crude has been an absolute bloodbath, but that hit some technical support. If you're reading our research, you're aware of my tone that in crude, what it's been. That was a big mover. Equities, obviously, making a pretty fairly sized down move. We're hoping that's bottoming out. Gold, silver,
Powell kind of put a little bit of ease back in the markets when he spoke today. He seemed calm, cool, and collected. I think that certainly helped.
Yeah, absolutely. What about you? What are you seeing? I'll let you cover the metals because.
Oh boy, honestly, I was so honed in on the grains. The metals, I mean, they were relatively quiet, all things considered, compared to some of the other commodities. I mean, looking at the corn market, corn traded in a 31-cent range this week and settled a whopping quarter of a cent lower. Soybean this week, 45.5-cent range and settled 3/4 of a cent lower. So we ran very fast and ended up right where we started, basically. I think that's probably going to be the theme. Eventually, I think these markets probably start to become numb to these headlines. I know next week we'll probably get some more tariff headlines, potentially talks about a government shutdown. But I think once we get through that, hopefully see things kind of settle back in a little bit.
Hopefully. That's such a corn week to have, 31-cent range and settle a quarter down.
Yeah, that is corn to a T. So a lot. I refer to it as a trader's paradise this week. I mean, the daily ranges, the average range over the last 2 weeks for corn is about 12 cents, and then for beans about 18 cents. So it's a lot of good shorter opportunities. Really tough for hedgers to get a good grasp on things when markets are flying around and reacting to headlines that just pop up out of the blue. But we do have a WASDE report next week. That's going to be on Tuesday out at 11 a.m. Central Time. So that'll probably give the market something to trade. And then past that, we're looking to the end of the month prospective plantings report. So again, I think we'll kind of settle into this tariff talk back and forth rhetoric and get focused in on the fundamentals in the next couple of weeks.
Beans were having 18-cent range, average of 18-cent range for the week.
Yeah, the last 14 days, 18-cent range. This week's trading range, 45.5 cents. That up slightly from last week's range, 36 cents. So beans, I'm actually halfway optimistic on. More so the new crop November contract, and I think we talked about that in our last video. The potential for acres to come in a little bit of light there. Maybe that'll offer some oomph to the beans, but we won't get that prospective plantings report until the end of the month. So a lot of back and forth trading until then, which is pretty much on par for the month of March historically for grain markets.
Right. Interesting. Well, I was looking at November soybean vol. We'll talk about it off air, but that was looking interesting. But yeah, so we'll cover that off air. I'm sorry, I'm just all over the place. What did wheat do this week? Is my screen reading off? I think I have a typo with
Yeah,
wheat up.
the wheat market was little change. It held, tried to hold its own. Held the 540, 545 level for that May Chicago contract. That was encouraging. I really would have liked to have seen it perform a little bit better with the dollar weakness that we saw. So
Yeah.
I'd like to be a believer in wheat, but wheat is one of those markets that can be very unforgiving. So my conviction on the upside there, limited. I would say cautiously optimistic is probably my bias here in the wheat market.
Okay, cool. I'm seeing KC wheat up 11 cents, but I think my table copied over incorrectly.
Is that the May contract?
Should be.
Yeah, let's see here. Yeah, I think you need to. I think that table's a little bit off.
Perfect. Well, that's how this week's been going. We'll just keep rolling with it, all right. That kind of leads us into another interesting conversation. The dollar this week starting to really weaken up. You would hope that would drive some exports out of the U.S., wheat, cotton. But this environment we're in right now is so unpredictable, and it's flip-flopping almost every second. To be totally honest with you, I don't know where the tariff situation is left, because I thought the Canadian-Mexico tariffs were pushed back to April, and then did he just accelerate those to start now?
Well, I mean, let's be blunt. I don't think anyone knows exactly where that situation is at, and that's why you're seeing the market so hypersensitive to any headline that's out there. Is because no one, I don't think, really knows. I think the more headlines we get, eventually we'll get some clarity out of it and we'll become numb to it. But I think that uncertainty is really what's driving the volatility this week. Is no one, I don't think, knows for sure. You may get one headline in the morning and then that's walked back or reverse later in the afternoon. That's just the environment where we've been in this week.
Right. Like delaying tariffs on Mexico, Canada for a month to accelerating everything to happen right now. It's been insane. What are you hearing from the hedgers, producers, end users? How do they manage, and how do you help them manage a market like this? I mean, do you stay patient? Do you sit on your hands? Are you trying to be opportunistic? Like, how do the hedgers take advantage or stay safe during these periods?
It's tough because it varies from individual to individual, right? Everybody has different risk tolerance and different risk appetites. Ideally, producers took advantage of higher prices already. That would help alleviate things. But in this back and forth environment, I was on another TV show this afternoon. I was talking about the benefits of options, just giving yourself that staying power. Sure, premiums are a little bit expensive with the recent rise in volatility, but it allows you peace of mind knowing that you've got protection on without worrying about these daily swings that we're seeing in the grain markets. Ultimately, I think the corn market can grind a little bit higher, but I think producers probably be playing a little bit more price defense if we get another 10 to 15 cents on top of prices.
In corn?
In the corn market. Yeah, we get to 480, 485. It's a 50% retracement from the recent range that we saw, as well as the 50-day moving average and previously important price points. So I think we get up to there. I think it's time to play defense for producers.
That's a pretty good sell price, all things considered, with acreage looking where it's at. Trade situation. That would be a nice price to get at. Have to imagine as a hedger.
I'll tell you what was really interesting to see here, really, and not just today, but through the back half of the week, was that cattle market.
Yes.
Typically, when you get such a sharp sell-off in the outside markets, you start to see that really raise concerns over consumer demand. And talking about pulling back on beef prices and looking for cheaper protein alternatives, where cattle rallied about $10 off of the lows of the week and finished, I think, $7, $8 higher in the live cattle market. So that was, I don't think I've ever seen that, where you get a sharp risk-off trade in the equity markets and cattle are bought. That does not happen very often. So I think that probably underpins a solid fundamental backdrop to that market. Not only was that impressive, but it's also a counter seasonal rally. So cattle
Interesting.
market continues to be very, very stout for sure. That caught my eye this week.
Were there any, and I'm very ignorant when it comes to cattle. I know you're going to have a lot of, cattle producers and users on here, but what is there any headlines? Like what kind of drove the sharp up move?
The higher cash trade was rumored through this morning. That certainly got buyers optimistic. I did not have it on my bingo card, though, to see the rally that we saw in the cattle complex this week, especially after the trend of long liquidation that we've seen over the last couple of weeks from those contract highs. I would have thought that the cattle market would stay subdued, but I guess buyers were ready, willing, and able to buy the pullback over the last couple of weeks.
Interesting. I wonder if it's tariff related or trade related, anything like that. I
I
guess
think,
we'll find out.
yeah, we'll find out.
Right. Interesting. Oh, I love trying to learn that market because it scares me, and you need a trusted partner like Oliver Slope to manage that market. I'll say that.
Yeah, we've got a good branch office in Nebraska. Ben Rand, he's really the research head on that, so he really
Yeah,
puts.
that's when Ben talks cattle. In our chat, we go through markets all day. He starts talking cattle. It's so far over my head. Like I don't even know. He knows that market like the back of his hand. I feel like.
Yeah, I typically rely on him for a lot of the fundamental news. I trade a lot of price. I know the basic foundation, but man, he knows the intricacies for sure.
Gotcha. Awesome. Awesome. All right. So environment, insanity, flip flopping of tariffs, the trade situation. Nobody knows what's going on.
Yeah, where does that put us for next week?
That's what I'm trying to kind of figure out. And this equity selling pressure has been, pretty significant. This down move in equities is starting to scare some people. To me, it doesn't look like your standard, fear-driven, multiple compression equity sell-off. Like the flows are almost too consistent. There's almost no up moves or retracements. So I was starting to get curious as to is there another driver of these flows, like large scale capital trade flows? And in Europe this week, there were some fairly large fundamental shifts, right? Where Germany is very staunch on running a balanced budget, not running twin deficits, with the Trump administration pulling military aid back from Ukraine. They put through some budget reforms to really subsidize their military industrial complex, their manufacturing capacity, and they're going to start spending in Europe on military, their manufacturing capacity. So GDP estimates in the EU have trended higher. Some inflation estimates trended higher. And I think it was Wednesday, German 10-year interest rates had their largest up move in a single day since 1990. So those are pretty sizable moves. And then looking at it in 2024, to me, one of the easier trades was kind of the carry trade between U.S. interest rates staying firm and getting dollar strength, while the euro was set to weaken with their economic situation, and they were going to be cutting rates.
Right.
So I think there was a fairly large amount of capital tied up in a U.S. euro carry trade. It's a thesis. It's a preliminary thesis for now. It's not fully baked. That has largely turned around, right? Where all of a sudden that's shifting. And if you look at the total return index of U.S. euro carry trade, that has fallen off sharply. So I'm starting to think there's almost an August situation where the yen carry trade blew up and there were just huge flows exiting equities. I'm starting to think that is driving a portion of this equity sell-off. And it's a preliminary thesis for now, but it interests me. So yeah, Europe is going through some shifts, and it's going to be interesting to see how this all plays out. But how are you kind of reading this macro environment, and what are you seeing?
I mean, It goes back to kind of the trader's paradise environment when you're kind of zooming out. I've been keeping things very, very tight and short time frame with clients. It's 1 minute you're in a good trade, the next minute a headline comes out and you're underwater. So I've just been kind of keeping things tight, trying to get a grasp on things. I think ultimately, going back to the headlines and the tariffs and the volatility, I wouldn't be surprised to see the market grow a little bit more numb. Maybe we get a bit more clarity behind it here in the next week or so. And I think once that dust does settle, there's going to be some tremendous opportunities out there.
I totally agree. It was nice to see gold and silver rally this week, right? Where in previous weeks you were getting risk off flows and you were seeing gold and silver also sell off, right? I like the risk off bid gold and silver caught this week. The U.S. dollar is weakening significantly. Hopefully, that provides some tailwinds to the commodity markets. Yeah, insanity. I've kind of highlighted that in the crude letter. Try to every day. It's just prioritize risk management. Don't get married to positions because.
Well, sizing is more important than ever too, right? You put your ego aside. Tighten up your sizing, give yourself the ability to stay alive. That's what it's about. So.
Absolutely.
Well, I think that's a great place to end it. I'll remind everyone watching and listening, if you have not signed up for a trial of our daily commodity commentary, head over to bluelinefutures.com. Get your free trial. Again, you can sign up for a lot of different markets, agriculturals, energies, metals, indices, etc. It's all on bluelinefutures.com. We thank you all for watching and listening. Hope you have a happy and safe weekend.